Well, g'day there traders and friends, market participants and enthusiasts right around the world. You are here with James on behalf of Pivot Point Trading as I sit down with you on this Tuesday afternoon market recap. I just wanted to say from the beginning of this market recording that I've been particularly unwell over the past 3 days. Really since Sunday, I've had a rather violent fever. I haven't been able to keep food or liquid down, and I've just been generally unwell. Yesterday was really the climax of it. As I sit down and record, you can probably hear my sinuses are still relatively blocked. I'm still not the best. However, it is important to update you on what the markets are doing. I just wanted to apologize because yesterday I didn't bring you a market update. The reason for that was because technically I just couldn't. I couldn't bring myself to actually sit in front of the microphone, which I'm doing now, and to recap the financial markets. So my apologies for that. I'm struggling as I sit down right now anyway. I mean, I feel as warm or as hot as the sun at the moment. But I'll do my best anyway, just to recap what's going on. I'm hoping that tomorrow will be a better day for me as I wake up, and I'll be able to sort of come back with a little bit more vigor as to what I'm currently doing for you at the moment. So I just wanted to apologize before we move into the market analysis. But really, having said that, let's talk about the Dow Jones Industrial Average. Yesterday, Monday, of course, was a relatively interesting day's worth of trade. We started exceptionally strong. I was following this from bed. However, what we produced during this session was that of a shooting star candlestick. When I first saw this, immediately sort of alarm bells began to ring that this is that of a shooting star. So we should be waiting for and preparing for that of a pullback. Now, what is interesting about this is that we simply don't know how this pullback is going to establish itself. I mean, obviously, we've broken out very aggressively since last week. And to an extent, this is going to be the natural adjustment between that of demand and supply. We have sort of moved into an animalistic type of scenario, especially when it comes to market psychology and also sentiment, especially that to the high degree of bullish sentiment out there in the financial markets. What we need to pay attention to at this particular point is, well, does the market pull back in a controlled manner, or do we get some really violent days worth of selling? Now, the Dow Jones Industrial Average today closed down, I refreshed my chart with about 30 minutes to go. I did see a little bit of a bounce towards the end of today's trading session. I think we closed at about negative 56 points for the day. So my candlestick isn't really a true reflection as at the current juncture. But as you can see, a relatively weak day's worth of trade. However, the good news is that we're still holding up above these rising exponential moving averages. As you can see on my screen right now, I'm actually refreshing the data. The current session daily bars is a little bit laggy on this particular software setup. But what you'll see is probably this top right-hand corner, it will adjust and it will move towards more so 50 or 60 as we move towards the end of the session. So as you can see, we've got the new print at 87 or negative 87. Pay attention, of course, to the rising 20. The 20 is where I'm expecting these markets are to pull on back down to. And what this appears to be happening, I know it's very infant or in its infancy, is that this may be some form of a bull flag. We'll pay attention to volume as at the close of today. Yesterday's volume was relatively high, so it really gives a lot of, validity to the upper wick which presented itself during the intraday movements on Monday's session. But pay attention to this. It is an interesting market and something you need to be prepared for. Now, with the NASDAQ, you can see on Monday we don't have that of a shooting star candlestick. We have what we call an engulfing long day Moribos. This is a very bearish candlestick. It is essentially the strongest of bearish reversals. However, as I say this, what we're essentially doing is we're coming back down and we're trying to retest this rising 50 exponential moving average. Now, I spoke about this over the weekend. Every time in most recent history that we've come back down or even mildly overshot the 50, it has been that turning point for the NASDAQ. And I expect it to be the same more or less towards the end of this week. Today's candlestick is still under construction. It is very close to what we assume will be the final print. But you can see here, this is again a shooting star candlestick. So we've got an engulfing candle on Monday. We've got a shooting star candlestick. We tried to push it up during today's session. We couldn't hold these higher levels. In fact, it was sold. And it really looks as though we are definitively closing this gap. So what is appear to be happening on the Dow Jones Industrial Average, if you take into consideration the gap between Wednesday and Thursday last week, there is still a good chance we're going to come back down. And the same is true for the NASDAQ, except what we're seeing on the NASDAQ is potentially that of a little bit of a market which is further down the road, so to speak. We're seeing a selection of bearish engulfing candlesticks as well as high wave spinning tops as well. So a little bit more volatility, obviously, with tech. A lot of the tech companies have been or continuously sort of hammered over the past 1.5 weeks. So we'll keep an eye on this, but really the first target that you need to be mindful of is that rising 50 exponential moving averages. Now, the oscillators are a little stretched. This happens during bullish trends. This is not a major sell signal, so to speak, on an intermediate or even daily, macro sort of monthly time frame. this is just suggesting that we are moving into another sideways sort of correction. And this is after, of course, the recent breakout, which we saw towards the end of October and also in about mid-November. We are net down since the breakout in November as at the close on Tuesday, but give this a little bit of time and pay attention to what happens at that rising 50. What hasn't happened is that our 6,921 entry has not triggered. So we were talking about this over the weekend of the three markets. I know we're in positions on the diamonds, we're in the positions on the SPYs, and really the only market indice that I felt comfortable trading this week was that of the NASDAQ. The reason for that was because we've already held up around this area. We've got quite a decent short-term resistance area. Again, we have not tagged this, so we're not in any new or adding to existing NASDAQ options or Q options to the upside at the moment. It really is that of a wait-and-see type of market. Now, what I'll do for you also, again, my apologies for the way I sound. My voice is shot, by the way. You can probably tell that I'm relatively severely congested at this particular point, but I want to speak about also that of the US dollar. You can see it's drilling back down into the support area. It's doing everything in its power, in its nature to actually turn. We've had two entries on this, 93.39 and also one a little bit higher at 93.60. And really the thesis for this trade is that of an inverse head and shoulders. And essentially what we're doing right now is retesting that inverse right shoulder. We did overshoot it, albeit rather temporarily. But what you're seeing, pardon me, that's my chest going again, is that the oscillators are starting to flick to the upside, which is exciting. So pay attention to this. If you're not in the US dollar, if you're not in UUP contracts, for the first quarter, at least expiration the first quarter of 2018, you've got the possibility of entering around 93.60. And with that, it's suggesting that we are going to see confirmation through these oscillating indicators. So as I sit here, quite unwell, I am relatively excited about that US dollar index trade. Now, if I continue the discussion, it's no surprise that gold is starting to break down. Today we closed down close to $1. I know the candlestick is that of a hammer at support. This is generally what happens once you come down and you retest that critical pivot point. So if you have the GLD put opens open, if you had them open, you were in this trade. If not, now you have that structure to set the trade up. And the structure essentially is, at this particular point, the break of the intraday low of Tuesday's candle, which is today's candle. So you've got this little, again, hammer, so to speak, at support. It isn't the perfect hammer at this particular time, but if we were to cross down below 119.57, pay attention to gold. Gold is going to get hit. It's going to get hit hard. All right, disconnect yourself emotionally from potentially any emotional sort of connection that you have to commodities, especially that of gold and probably to a lesser extent silver. Because it will get you into, potentially it will set you up for a lot of trouble and pain. Here's the chart of silver. Silver has already broken down. You can see over here at 1582, that was the breakdown point. I personally did not have this open. I'm also waiting for that of gold just because of the way in which option derivative contracts are packaged and priced. I think it makes a lot more sense to actually be trading the puts in gold compared to the puts in silver. But again, that's just a personal choice. There's no reason not to have SLV contracts open if you choose to do so. But you can see anyway that we've already moved from about 1582. We're trading at 1521. You can see the sell side volume occurring on silver. And this is also taking into consideration a lack of actual any material bounce, so to speak, at the moment for the US dollar index. And you should be thinking about this as well, because once the US dollar really starts to begin motoring higher, it's going to have replaced some tremendous headwinds, so to speak, both for gold and also silver. So I've been essentially speaking about this until I'm blue in the face. Right now I'm quite red in the face. I'm extremely hot right now. My apologies again. My fever is through the roof. But it's important that you see that as well, because it's sort of forming before our eyes. Now, a lot of tech companies obviously have been hit, and they've been hit quite aggressively. This is in sort of correlation, of course, in connection to the pressure that the NASDAQ is under. If I go to the weekly chart for yourself, this is really starting to look like that of an evening star 3-week reversal pattern. You've got the long day Morobozu. Now, we don't have a doji candlestick, nor does the actual lower wick hold within the real body of the candlestick 3 weeks ago. But this, to a certain extent, really looks like that of a 3-week reversal pattern, a very strong 3-week reversal pattern. We'll obviously have to see how Wednesday trades, how Thursday trades, and how Friday also trades. But at the moment, this is certainly a very bearish construction underway on the NASDAQ. Now, as I sit down and say this, what we have is a lot of stocks, a lot of tech companies, and also individual companies that are actually retesting their original breakout points. Again, my apologies for my voice as I continue to speak. I'm sort of deteriorating even further, but it's important that I say this regardless. As you can see, Apple essentially is still sitting on that neckline, what appears to be that of a double top. What makes this interesting as well is that this could be potentially that of an exhaustion gap. All right, so at the moment, we don't have a trigger on the bearish side. The bearish play, so to speak, would be the breakdown and the retest of the neckline at a later date. But as I say this, and this goes again for a lot of individual companies as well, what I believe is actually happening is that potentially a lot of people are somewhat short-term misguided, and they've lost sight of the simple fact that really what it appears to be happening at the moment is that these stocks are simply resetting. And as they reset, they're waiting for the 50 to come up and retest, of course, price action. Now, this hasn't happened on the markets, on the actual indices for quite some time. And although for Apple, for instance, last time we were at or resting on the 50 was towards the end of October, which is somewhat recently, a lot of these other stocks haven't actually retested their 50 in quite some time. So I assume right now that we're simply moving sideways as we allow these oscillators to reset on my screen. And the 50 is going to be that bounce point moving forward. I don't have a bullish trade trigger or an alternative at the moment for Apple, but you can see for yourself, even Amazon today, it bounced albeit somewhat mildly. We're up $7.4. Again, if I just refresh this, you see for yourself that this number would change. But this candlestick is that of a very slight bullish sort of candlestick, that of a bounce. And it is, of course, respecting roughly that 1,140 pivot on my screen at the moment. Not the nicest of chart setups compared to that of Apple, but you can see for yourself up $8.34. If I continue with Boeing Airlines, this is the one stock which has broken out. Again, I was a little surprised by Friday's candle last week. Fast forward to Monday, you can see for yourself that we're back up towards the highs, or at least the closing price on Thursday. And I spoke about this over the weekend. There was a potential for you to just bank some of that profit, to put at least a small portion, a small percentage of some of those call contracts from 267 in your back pocket and essentially make this trade risk-free. Now, if you got in at 279, that's fine. We can still continue, of course, but at the same time, we may see a little sharp brief pullback and then a bounce to the upside as well. Pay attention to that rising 50. You can see that it is still quite a long way below current price action, but we still have this resistance area that should hold as new support if we are to come back and to retest that at a later date as well. Baidu, I spoke about this over the weekend. We were saying that, hey, look for a bullish candlestick at about this 230 pivot. This is a hammer over here at support. Generally, when you come back down and retest it for the second time, it will hold and it will bounce all the way back up to that top resistance area. This is looking more and more like a channel consolidation between support and also resistance. So pay attention to this. Personally, I don't have the guts, so to speak, to trade it or to place in a little cute call contract or a little buy order above the high of today's candle. If you choose to do so, that's your decision, but I do expect over the coming weeks that we are going to see Baidu back up at about 250, and that'll be interesting to see whether we break out or not. Now, Caterpillar is also pulling back. We got a gap up on Monday. It's pulled down slightly today. This is still healthy. You can see volume is trickling out of this, so this is suggesting that this is that of a bull flag breakout continuation. So pay attention to this. We're still above all three of the exponential moving averages. All we're sort of working with is the markets themselves, which have been relatively weak to begin the week, and that's obviously affecting that of the Caterpillar price as well. Now, COP, pardon me, my apologies again for sniffling in this recording, but I'm going to persist and move through the rest of these stocks. The COP is bouncing above 51.23. I've still got my target up here at 54.41. Again, be mindful of market shop, market noise, but if you've got long enough dated options on that, that will run its course in due time as well. We've got CVX on the precipice of breaking out. We haven't actually closed above 120.97. We've got very close to it on two occasions. I mean, intraday Monday and today we've pushed above it. So if you are in this, that's fine. It looks as though we are setting up that of a trend breakout. You can see the ADX likes it. The CCI also likes it. We are short-term overbought. That is expected. You can see on my screen. You can see the Stokes is relatively high. The RSI is quite high, and the MACD is still trending to the upside. But this is a pretty decent trade setup. It'll be interesting to see how the markets move and obviously the effect that that has on CVX as we round out the week. We've got Google. Again, another stock very similar to the type of setup that we're seeing on Apple. This is the legitimate closure of this open window. So we were talking about this again over the weekend. it's good to see. It's interesting to see. It's constructive to see that we've got this lower wick here. And this is looking as though this is going to hold. I mean, if I change this, you can see that we're bouncing off that rising 50. That's really been sort of the narrative or the theme that I've been speaking about in this particular upload. But also on top of that, as we've continued to move on back down in the short term, what these oscillators are doing are just naturally resetting. So you've got the RSI, which is starting to bounce. The stochastics has got a little further to go. And you can see for the first time, the histogram bar, at least the momentum registering, the histogram bar registering momentum is starting to plateau, albeit slightly. I mean, we'll see what happens for the second half of this week, or Wednesday through Friday. But there's a good chance that Google is actually going to stop here, and this is going to be the bounce point, which is going to take us above the swing high, the breakout which we had set at about 1,066. This is under construction as well. I quite like it. Goldman Sachs, I'm not in this trade above 242, but it has hit the target. It overshot it at 251. If you had your seller entry at 251.48, you were actually given a bonus. I mean, the high, or at least the open, was 254.89. So you got a little bit of a bonus, another 40 or 50 cents on those derivative contracts, which worked out quite nicely. I wouldn't be looking to touch Goldman Sachs at this particular point. Allow it a little bit of time to run its course and hold that resistance point. And we'll be speaking about either a reversal or a breakout, so to speak, towards or probably before, or at least the open of next week's worth of trade. IBM is still grinding higher, so you can see even given today's trading session, we closed down 74 points. We're still continuing in that advance to the upside above 152.04 and 152.68. This is a rather slow type of trade. It hasn't been as aggressive as the market's breaking out or a lot of those other individual companies that have gone absolutely parabolic, but it's good just to see the general direction continue to the upside. 157 is my target. Your second target should be 160.42. So I like the way this trade is working out. Now, Netflix, again, similar to that of the NASDAQ, similar to that, of Apple and also Google, to an extent is retesting the breakout pivot. Now, this is different. We've got about 2 months of sideways consolidation. It looks like that of a short-term triple top. I'm not prepared to actually call it a triple top. Pardon me, God, I'm really not all that well. But as you can see, another high wave spinning top here. If we are to essentially hold at this particular pivot and get any traction more or less where this breakout pivot is, you can see on my screen here, if I draw this horizontal line, if we get any bounce from this area, consider this very similar to CVX or even an IBM type of trade. I would not be looking to short Netflix. The only sort of requirement or a requirement that I need to actually have in order to short Netflix is very similar to what I said about Apple, which will need to see Netflix come back up, retest this 190 pivot, and then produce some sort of shooting stars or engulfing candlesticks, bearish piercing patterns. I mean, dark cloud covers coming up to the previous day's close. These types of things are what we'll look for in Netflix. But at the moment, it's sitting in no man's land, and it's really not a great trade setup, and I want you to understand that. And to sort of conclude with, pardon me, we've got Tesla, which is still lingering around that declining 10 exponential moving average. If I go to the weekly chart, we're down $2.46, but really we've gone absolutely nowhere. And Tesla is still a trade which is forming. I still believe personally it's going to rally to 330 to 340, and then that's where that reversal is going to come from. Very similar to potentially the trade setup on Netflix. The real difference, though, between that of the potential trade setup on Netflix and that which is more definitive on Tesla is that the Tesla trade has been setting up for quite some time. As I just alluded to with Netflix, it's really been a trade or potentially a triple top, which has been under construction for about 2 months, whereas compared to Tesla at the moment, you can see I've got 1, 2, 3, 4, 5 months before the breakdown of the neckline. This could be a very quick retest, yes, but I still expect it to come back up and have a more definitive retest of this breakout pivot before running its natural course. Now, the only stock that we have left is that of Facebook. Facebook has been absolutely brutalized over the last couple of sessions. Again, what I was speaking about has more or less come true. We're holding this support area. So we were speaking about this over the weekend, how we've got this open gap. The open gap was very close to closing on Friday. Look, I personally thought that we had closed the gap. I mean, you can see the low of this candle just here. There was a couple of cents. I mean, I think it was 6 pennies, so to speak, between the high of this candle and the low of this candle. Well, that has been completely closed as at Monday. And you can see today during today's session worth of trade, we're starting to see that first white candlestick. And this is healthy. This is essentially the grassroots of Facebook coming back together. And as long as we can get back above this rising 50 exponential moving average, the trend is still intact. What we're still doing is we're still setting up a series of higher lows. And also, if I can move this current session daily bar, is that we're still holding and setting up that of higher highs as well. And most recently, this is what comes as a bit of a surprise to me, is that we've built such a nice resistance area. We had the breakout, now the retest, and this type of price action that we've seen over the past 5 trading sessions generally doesn't happen. But if it is to happen, it offers you another potential lower price to enter into the stock. And this is somewhat routine. Again, I wasn't expecting it to pull back as much as it has, but at this particular point, as long as we hold the lows, okay, of today's intraday sort of session for Facebook, you've got all of the upside in the world to continue for Facebook as well. It might not happen essentially tomorrow, but there's a good chance that over the coming days, and if not weeks, we're going to see a very similar type of grind higher, like I spoke about for IBM, for instance, and a lot of these other companies as well, which are holding support. So that will do us as at Tuesday. This has actually been quite a long market recap. My apologies for that, and also please, sorry I didn't actually recap the markets yesterday. Just too unwell. It's only me who can do this sort of analysis, at least from my end, and that's I guess that's a little bit of a con, so to speak. When I'm too unwell to record, simply I don't have the resources to give this microphone to anyone else. So please accept my sincerest apology. And look, I'm hoping that tomorrow, being Wednesday, I wake up and I will be in better spirits. I will be of better health. I'll be able to bring you some more market recaps as well as we round out this week and the first full week of trading for December 2017. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.